Good evening. Welcome to Personal Finance for New Law Students. My name is Leah Young, and I'll be presenting on this topic this evening. I'm excited to walk you through all the things that I think are important to think about as folks are headed to law school. Before we get started, I would love to just hear from folks in the chat, make sure I've got the chat settings right. Let me know where you're at in the process. Are you heading to law school next year? I know this was sent to all Phi Alpha Delta members, so maybe you're trying to get an early jump on planning, but would love to know if you're headed to law school this year or if it's in the future for you. So if you don't mind throwing that in the chat, you can send it just to hosts and panelists, so AKA me, or to everyone if you want to get the broader discussion started. So thanks so much for considering that. And let's jump in. So I'm going to spend a couple of minutes just introducing myself and why this matters. We'll talk about preparing that budget for law school. We'll talk about loan strategy to keep those costs down. We'll talk about why credit is extra important in law school, and some common pitfalls to avoid through this process. We'll talk about Juno resources because this webinar is hosted by Juno, and we have some great resources and opportunities for law students, including negotiated loan rates that are lower than the general market for our members. So lots of time left to answer your questions, hopefully, and I'll send you with some resources about how to meet with me individually if you'd like to talk about your specific situation. All right, let me just pop into the chat. It looks like we've got a couple folks headed to law school next year, one or two that are just checking it out and wanting to prepare earlier. Some folks LSAT studies, as you can see, to everyone. Perfect. Thanks so much for chiming in. All right. So LSAT studies is a whole nother budget category in and of itself with pre-law expenses. We're not jumping too far into pre-law expenses, but I've spent a lot of time over the last 15 or so years talking with law students, and applying for law school in and of itself can be a financial challenge. So I do know of some webinars on that. Access Lex Institute, if you're not familiar with them, has a great session on paying for law school that's in their pre-law max program that covers those pre-law expenses as well. All right, so anytime you see a financial presentation from anyone, you will likely see a disclaimer. This is ours. We're not an investment advisor, financial analyst, securities broker, financial advisor, tax advisor, or financial planner. None of this is considered investment advice, financial advice, etc. While Juno is an organization that works to expand access and improve eligibility criteria, we cannot confirm or deny whether any individual will qualify for a private loan. We're not a lender, and neither Juno or any institution, aka PAD, that may have invited you to this presentation provides recommendations regarding the selection of any specific lender in this presentation. All right, with that out of the way, again, my name is Leah. I used to be a director of admissions and financial aid at a law school, have worked in undergrad financial aid and graduate financial aid. I'm an accredited financial counselor. I've spent 15 to 20 years in financial aid and financial education, have walked thousands of students, including, I would say, probably thousands of law students specifically through the process. So hope to offer you some insight here today. All right. Here's some interesting positioning as to why this topic is important. Why is financial planning for law school, thinking about your costs and cutting them down, so important? Essentially, for every dollar that you borrow, you're repaying close to $2 with interest, depending on your interest rates, how long of a term it takes you to pay it back. But that's just kind of a ballpark. When you are borrowing loans as a law student, interest starts as soon as the loans disperse. And that's true of both federal and private loans. We'll talk about the difference between those a little later. But all loan types for graduate they accrue interest from disbursement. So you'll start accruing interest when that fall piece is dispersed, and then when your spring disbursement for spring semester is dispersed, that piece will start accruing interest as well. I did forget to say, just, if at any point you have questions, feel free to throw them in either the chat or the Q&A, and we'll get to that. So making small cuts, being mindful of your spending, of your budget can save you significant money down the road. We want you to have resources. We have our own 3-year overview cost. So a lot of calculators are for 1 year at a time. We have a 3-year planner. It's also a budget tool. So you can essentially calculate, project what your total law school borrowing is going to be, what your monthly payment options are, and actually track your whole monthly budget in this spreadsheet. It's a Google Sheet, so you just make a copy of that and put your own numbers in there. You can always schedule a one-on-one Zoom. I'll again pop the link in at the end of this call for how to meet with me if you wanted to go over those numbers. You're not alone in navigating this. All right. So let's talk budgeting on a student income. We, again, popping that calculator in there. The link is also in the chat, but essentially figure out what you are going to need to borrow. And on this next slide, I also like to highlight here over here on this side, if I grab my little pointer, it is pretty dangerous to use all of your savings down to zero while you're in law school. So if you are lucky enough to be coming into law school with some savings, keep in mind that there are some pain points along the way where you're not able to borrow, and you want to make sure you're leaving yourself a cushion for those pieces. We're going to cover them as we go through. All right. This is super important for those of you entering law school right now. Perhaps those in undergrad that are borrowing, you might be familiar with the term cost of attendance. This is a ceiling, not a target. What do I mean by that? The cost of attendance is what every school in the whole country and the whole US has to come up with a number that represents what the average student would need, not only in the build expenses, so the tuition and fees, but also housing, food, utilities, what it takes to live, books, supplies, and transportation, personal and miscellaneous expenses. So that represents the maximum you can receive in any type of aid. And that includes, so student loans are considered aid. So you take that cost of attendance on the school's website, you subtract any merit or need-based scholarships, any outside scholarship, and that what remains is the maximum you can borrow. So it's a ceiling, not a target, meaning you don't have to borrow up to the cost of attendance. If you don't need it, it is far smarter to borrow less in most cases. Yes, you want to do your due diligence, making sure you're not underestimating your costs, but you essentially do not have to borrow that full amount. If that cost of attendance does not represent what you actually think you can live on, which happens, sometimes folks have life circumstances, responsibilities, families, etc., that causes those cost of attendance not to appropriately represent what they need, medical expenses. You can talk to the financial aid office and appeal that. Every dollar over that standard cost of attendance has to be documented. So it's usually a fairly, a process where you're submitting documentation, demonstrating your additional cost. What they will do is potentially increase your cost of attendance if you've made a good enough case. And that just increases that ceiling so that you can borrow additional. It's very rare that they supplement that with additional scholarships or free money. If you are going into law school, or if you are thinking about law school for a couple of years down the road and you have outstanding credit cards, car payments, keep in mind those are two big categories that a lot of people struggle with and are not reasons that you can increase that cost of attendance. Typically it's really for those things like your computer died and you need to purchase a new one, medical expenses, co-pays, unexpected um, surgeries, and what you owe is not something that uh, was expected. You show the bill, they can potentially increase that cost of attendance. All right. So a lot of folks are great with a budget, and some folks have never created a budget in their lives. I've been doing financial coaching for about the last 5 years, and I've seen everyone from, hey, I've never made a budget in my entire life, all the way through I have pages and pages of spreadsheets documenting this. So for those who don't know where to start, what you want to do is take your expenses. You want everything that you need, both both things that are specific and recurring, like typically you know what your rent is going to be each month. You may know what your internet bill is going to be each month. Those are the easy ones to start with. Then you add in things like food, groceries, utilities, which may fluctuate a little bit, books. And again, that spreadsheet that I popped in the chat a little bit earlier should help get you started with some great ideas. Then in that next section, you're going to estimate your funds available, what kind of family support you have, what kind of savings you're coming in with, scholarships and grants. You're going to take the estimated earnings during law school, whether that's work study, summer earnings, part-time. Once you get past 1L, most law schools will tell you that it is either not allowed or highly discouraged for you to work through your first semester, if not your first year. So that's typically the hardest year to get through for full-time students in particular. Once you're looking at the difference between those, so the expenses minus the funds available, minus estimated earnings, but again, that first year, that may be 0 or near 0, then that's going to be where you get to the math of calculating the loans needed and borrow the gap, not the maximum offered. So the hope is that when you take the expenses, you subtract the funds available and any earnings, that this amount is lower than the cost of attendance. If it's higher than the cost of attendance, that's where you have to start by cutting expenses or increasing earnings. If we have time, I'll show a little bit more on that budget worksheet, but essentially it can help you figure out how much you need each year and will help you see if it's higher or lower than the cost of attendance. All right, here's a quick sample. If you don't want to use the monthly budget, but you're not sure where to start, here, just again, start with the basics. Rent, utilities, groceries and meals, transportation, phone, books and supplies. Note this is averaged over 12 months, but typically students are experiencing those at the beginning of each semester. Health insurance, etc. I can't stress enough how important it is to build that emergency cushion. Again, summers are unknown. You don't know if you're going to get an internship. The bar exam is a big expense after school. We're going to talk a bit more about that. And this brings you to that monthly total. Just some suggestions. I know not everyone is in a place where it's a good idea to live with roommates, but that can be a big piece of reducing your costs, living further from campus. If you're attending in a big city, that might make an impact. Look for those used books, use copies and library reserves. Sometimes there are electronic options. I have found both personally and professionally when either I'm managing my own budget or when I'm working with students, a lot of folks just assume they can be super strict. I will go through periods where I'm like, I'm not going to spend a frivolous penny. But when you do that and don't build it into your budget, it makes it very, very hard to not want to give up altogether. So make sure you are allocating some high impact fun for you. The way I like to frame this is, you've got to have your needs in the budget, and those are non-negotiable. You got to have a place to live. You've got to eat. You don't want to cut your food budget so much that you are hampering the way your brain functions because it's not getting enough nutrition. At the same time, you've got to have those wants, but prioritize those wants. You might not have room in your budget for every single want every single month, but do some internal thinking about what are your high impact wants that are going to give you the most energy, excitement, that are going to carry you through those difficult times of law school. So for some people, that might be, a gym membership. Other people might be fine to exercise outside. Some people might love really good quality coffee. Others may be fine with any old coffee. So knowing what's going to have the impact on your mental well-being as well as your physical well-being can help you prioritize that rather than giving into impulse spending in the moment. I also want to highlight when you're living off of a student budget and borrowing loans, you get paid twice a year, essentially a fall disbursement, typically in August, sometimes as late as September, it depends on when your school starts, and then in January. So you're going to get this big lump sum, and oftentimes it's like $10,000 or more, and you're going to have to make it last till the next disbursement. So one thing that I like to highlight to students, put it in a separate account. Even better, put it in a separate high yield savings account. And those high yield savings accounts can at least offset a small amount of the interest that's accruing, because right now they're getting around 3-ish%, give or take. And that will help reduce your temptation to spend. So you just park it in that high yield savings account, auto transfer it monthly so that it goes into your checking account. So you're not overly tempted to spend more of that disbursement than is necessary. So basically you're creating a paycheck that's coming from your student loan disbursement. We have a refund calculator in that budget spreadsheet to help you calculate what your monthly allocation is. Some folks will divide their monthly allocation instead of 9 months because you're only getting that student budget cost of attendance for the months you're enrolled. And so in many cases, that's 9 months with summers off. Some students will try and stretch that over to 10, 11, 12 months so that they don't run out of money in case they get an unpaid internship or a very low paid internship. So you want to do that division. All right. Someone is recommending Synchrony, 3.4%. Yep. Really shop around, see who's giving you the best percent, make sure there's no fees. You're going to hear me say shop around later. There's quite a few different high yield savings accounts out there. All right. Feel free to put your recommendations on budgeting or products you like in the chat. I'm not going to recommend one product over another. I think it's important to do your due diligence. But I've heard people say, oh, for budgeting, some people are not spreadsheet people. Some people are app people. Some people like Rocket Money or YNAB, which stands for You Need a Budget. So whatever works for you. I've heard some students say, hey, I use pen and paper because there's actually research that creates more mindfulness. People spend less when they're actually writing down on pen and paper what they're spending. So if you haven't tried that and that appeals to you, give that a whirl. All right. Summer is unpredictable. Typically, it's harder to find a well-paying job in 1L year versus 2L year. And, a lot of folks do the public interest roles, judicial internships, but it's hard to get funding for those, especially if your school doesn't have summer stipends allocated to that. A lot of times they'll have public interest law funds or law associations that raise money to help fund those, but it's more of an unknown. Oftentimes people have better luck with paid internships between 2L and 3L here. They're often more trained, they're seen as more valuable by companies, so they may have better luck finding them. But that's one of the reasons why, particularly if you can stretch your budget to account for 12 months instead of 9 months, and that's how our spreadsheet is set up, you're planning against running out of money and you're freeing yourself up to take internships because you want them and they are valuable rather than on pay. Valuable being the intrinsic value to you. And hopefully you don't have to do that again second year, that you can get a paid internship. But, if you can from the start divide that refund number by 12, you'll be a lot safer. Also, you want to pay attention to deadlines. For those funding opportunities, oftentimes you need to apply by a certain date. So pay attention to those. Schools will have information sessions on what is available. Even when you are getting paid, and I won't distinguish necessarily between 1L and 2L as this slide does here, but it takes a few weeks to get paid. You start working, it depends on when the cycle is for the paycheck, might be 2, 3, 4 weeks before you start seeing income. For a lot of jobs, they may or may not be in the same location where your law school is located. So if you're going away for your summer internship, you may need to think about logistics like rent in another city. Can you sublet your own apartment so that you can have somebody else renting that to cover that, so you're not paying 2 instances of rent in your budget? So that's one of the pitfalls of law school for planning. And so some ideas to bridge the gap: if you can carve out an extra $50 to $100 a month, if you're not able to divide your monthly budget by your refund by 12, even getting a little can go a long way to building that summer session. I mentioned paying attention to deadlines. If you can get a target of 1 to 2 months of expenses, that's more like 10 to 11 months dividing your refund instead of the full 12. That's at least a cushion if you get some additional funding to help you for the summer. That could prevent you from going into credit card debt, which is at a much higher interest rate. And then again, trying to solve for that summer housing as soon as possible, trying to find affordable locations if you're going elsewhere outside of your law school. I really struggle with trying not to get people too nervous going into law school, but also making sure they're prepared. The bar exam is one of those things that it feels so far away, but I have seen it sneak up on so many folks and them end up unprepared and in a bad spot with funding their bar exam. So I love to outline the potential costs you'll need for this right from the beginning, because again, the earlier you can plan, the less likely it is that you will spend quote unquote found money on something that is not as important as making sure you have the time and mental bandwidth and preparation to take that final exam that is going to potentially stand between you and the profession you want to enter. So $1,000 to $4,000-ish are typical bar prep courses. Most students do purchase a bar prep course. Occasionally, schools will bake this into their cost of attendance, but I would say the majority of schools don't, but check with your school to see if they do. Just listed a few of the major bar prep companies there. Some firms, especially if you're going into big law, they typically pay for that big law course. If you're like, oh, I'm not going into big law, but you're at a school where a lot of people do go into big law, a lot of times those large firms will let them pick a public interest buddy. So make friends with the big law folks as well. And, they may be able to subsidize your bar prep study. Um, and that's always nice. Additionally, there are bar prep companies that hire reps, and you can get some of your, if not all of your course paid for by representing the bar company and answering student questions, selling courses, etc. The actually applying for taking the bar, in addition to the bar prep course, costs money. You can borrow that in your cost of attendance. But the biggest piece is often living expenses, because it is highly recommended you do not work and study for the bar at the same time. So for those 2 to 3 months that you're studying and not working, you need to have a plan for that. So when you total all of this up, bar season can cost you over $10,000 of living expenses, and the cost to take the exam and the bar prep courses. There is a product called bar loans, but they are, and we're going to talk about them in the next slide, but they typically are much more expensive than your standard student loans. So if you can carve that out of your standard student budget, often that may save you. Anecdotally, I've been hearing most students that have had to apply for bar loans were qualifying at rates well above 10%, if not greater than 15%, approaching 20%, really almost at the rates of credit cards, because they're a little bit higher risk of a loan, and because they're not tied specifically to schools. They're a post-school graduation, and there's only 2 lenders in the entire market that are offering bar loans. So when you combine that lack of competition and that they're just considered a typically riskier loan, the pricing tends to be higher for that. So again, if you can carve that out of your 3L or even a little bit along the way, yes, you'll accrue some interest, but it could still be worth it. Happy to help you run numbers on that. All right. So bar study loans are a private credit-based loan to help you cover those living expenses and your rates, but do check with employers first to see if they have stipends, advances for bar season. Some do. And then again, those campus representatives, if you can avoid it by saving from your first semester, that is the way to go. If you do borrow, shop around for it. Again, there's only 2 lenders, but make sure you're looking at both offerings to see what the rates are, fees, what flexibilities are included in there. Do avoid the peer pressure trap. If it is not that I'm telling you to ostracize yourself, but a lot of people assume that everyone's in debt anyway, we'll figure it out later. Make sure that you are keeping that manageable balance. Don't give in to the expensive social life. Be the person that is okay with suggesting doing something like a potluck or a game night or something that isn't going out to the fanciest restaurant. You will have people that are very grateful for that. You don't know what your classmates' budget is not your budget. I'm just going to pause and share that I am hearing a pretty loud thunderstorm going on outside of my house right now. If you're in the Baltimore area, you might be hearing the same thing. And so if by chance my internet goes out or anything like that, I do apologize, and we'll make sure we get you the slide deck if that happens, but hopefully that's not necessary. But better to tell you before it happens than think I just disappeared on you. Building habits pays off and it compounds, because if you get these habits under control 1L a year and you don't get used to spending more than you have to, then you get 6 more semesters of those habits stacking. Your future self pays. Again, that $1 to $2. And yes, you might think, well, when my future lawyer self is going to be incredibly successful and make a lot of money, there's no guarantee. Law salaries vary so widely. The median is $95,000 per year, but for public interest jobs, they can be more in the $65,000, $75,000 range. And then there's another spike at around $225,000. But again, nobody wants to pay twice as much as they're borrowing for that money. And even folks doing big law, the burnout rate is about 5 years. So you're going to need to do a lot of hard work in 5 years to pay that off. That's still not giving you that much cushion in your monthly budget if you've borrowed significantly. I'm full of such good news today. I promise I do want you to have fun. I just want you to be thoughtful. I want you to be thoughtful in thinking through your priorities. All right, so you've done your budget strategy. You've got some resources for thinking through that. Let's talk through your loan strategy, because most law students do have to borrow. That is statistically absolutely true. And we want to make sure you're borrowing in a smart way. So just to go over the process, you'll do this once per year in the summer. So if you're borrowing for each year, once per year in the summer, you can apply for multiple years at a time. That budget is going to help you determine how much you want or need to borrow. And then you're going to think about where you want to borrow from. I'm going to go over your options in the next slide. You'll complete the process for one or both of those situations. And if you have to change, I try and let people know one of the biggest anxieties when I talk to students is hearing them talk about the loan amount and getting it just right. If you don't get it right, if you borrow too much, you can always return it. If you don't borrow enough, you can increase it. Now, the recent loan changes with the borrowing market have made this borrowing a little bit more of a challenge, because they're going to do another look at your credit. So if things changed or if lender requirements changed, all of that can come into play, whether you'd be approved or approved at the same rate, higher rate, lower rate. So there's more unknowns in that piece. But you can, as long as you haven't borrowed up to the cost of attendance, you can request more later in the year. It's a little bit easier to decrease, but you might be accruing some interest if you overborrow. All right. So for folks entering law school this coming fall or later, there's new rules for law students, other professional students. You can borrow up to $50,000 in federal direct unsubsidized loans. If you're passionate about public service, you want to try and stick to as much of this as possible in the majority of cases, with some exceptions being your tip-top T14 schools with really strong loan repayment options. Everyone else, if they can keep it below that $50,000, that's going to be helpful for forgiveness purposes. And even it depends at those tip-top T14 schools from school to school and their loan repayment assistance plans, whether it makes sense to still do the federal or private. So I can't encourage you, if you're in that situation, enough to talk to the school's financial aid / loan assistance teams and make sure you're understanding those rules. But most law students are going to want to start with this $50,000. It's a fixed rate. It is not credit dependent. So as long as you are a U.S. citizen or permanent resident and not in default of a prior student loan, you are eligible for this amount. You have to do a FAFSA, again, once a year, typically in the summer, a little earlier for incoming students. And there's an origination fee that comes off the top of the loan. It's about $530 for that $50,000. There are great benefits to this loan: public service loan forgiveness, income-based repayments. I'm going to talk more about that, the new repayments on that in the next slide. Just stronger federal protections. So if you are not very, very, very certain that you are going into big law, if you don't have a long and fantastic credit history, all of that points you to the federal direct unsubsidized loan as your start. Above that, you can borrow, again, the cost of attendance minus any other aid. So if you're borrowing the $50,000 direct unsubsidized loan, you subtract that out up to the cost of attendance. Depends on credit worthiness. You could get a 3.5% loan. You could get a 17% loan. You could not qualify for a loan at all. All of that is what is changing in this new scenario with the One Big Beautiful Bill Act, where Grad Plus loans no longer exist. On the positive side, there are typically no origination fees on that. So the Grad Plus loan carried a 4% origination fee that came off the top of the loan. And for folks with good credit, above a 710-ish, I'll cover that in another slide. It's likely that your loan rate may be actually lower than the federal rate. Won't have the same protections as those income-driven repayments. But you can also have flexibility in how long you want to take to pay off those loans. But you do have to decide that at the beginning. Federal repayment plans, there's going to be 2 of them for new borrowers. The first one is going to be based on how much you borrow. It's going to determine how long you have to pay it back. Most law students, again, just statistically, are going to end up in that 25-year repayment term. That doesn't mean you have to take 25 years to pay it back. There's no prepayment penalties on any official student loan, federal, private. But my concern is people will just pay the amount in front of them and end up paying much more interest than they should by just extending that over 25 years. For the first couple of years out of law school, I'm really excited about this repayment assistance plan. Goes into effect in about 20 days, July 1st. Based on your amount that you pay is not based on how much you borrowed, it's based on how much you earned. For those of you, even if you're going into big law, still listen to this plan because it is going to use your latest tax return. So when you graduate, you have 6 months of a deferment in your federal loans before you're expected to start repayment. Your most recently available tax return is going to be based on the time you were in spring of your 2L year, summer between 2L and 3L, and fall of your 3rd year. Oftentimes, people are not raking in big bucks. Even if you're making $40K in big law, that translates to $100 a month repayment. If you're doing public interest, you might have a $10 a month payment. That also has an interest subsidy, so anything your payment doesn't cover in interest gets forgiven. And up to the first $50 of your payment gets put into your loan principal rate. So your loan is only ever going to go down versus balloon with the interest, because that's where some of these horror stories came with folks paying on their loans for many, many years and the balance just getting higher. That will no longer happen thanks to this new plan. Now on the, downside, it's a little bit less of a generous calculation once you get past $80,000 of income and than the previous plans. So the new interest subsidy is fantastic. The fact that there's no negative amortization, but essentially the payments are going to be a little bit higher than the previous plan of income-based repayment. For private student loan repayment plans, you have to pick them up front. Most students pick the first 2, deferred, not paying anything, or fixed, where they pay $25 as a minimum amount. That's my favorite because oftentimes that will allow you to get 0.25% off your interest rate for signing up for auto pay. So you're paying a little bit of your accrued interest along the way, and you're accruing less interest because of that auto pay feature. So if you can swing that out of your budget, that is an excellent option. Really, typically only people who have family assistance, partner assistance will choose interest only or immediate repayment, as those are pretty hefty sums if you're borrowing significantly. You want to be thinking about balancing the term and years with the interest rate. On one hand, you want to have flexibility if you need longer to pay it off, but you want to make sure you're getting enough of a benefit from the monthly payment. So 5-year to 7-year, you see a pretty big change, almost $600 as you're moving from that. 10-year, another 400 plus drop. But you see less of a drop here as the interest rate goes up substantially with higher terms. And this is just, again, an illustration. Sometimes it will follow this pattern, sometimes it won't. But you really want to be thinking about what is a reasonable monthly payment for you versus what is a reasonable interest rate as you're evaluating your offers. So that's all just part of that strategy of choosing between loans. I get very a little bit anxious about this type of messaging because I never want to feel somebody to feel pressure to make a move on a loan, etc. I want them to be educated, but rates are not locked in until you actually apply for the loan. So when you do credit checks, like soft credit checks, which is an excellent place to start, we offer soft credit checks on Juno with our lending partners. Credible offers, soft credit checks on theirs, but you don't lock in your rate until you actually click apply now, go through to the lender's site. That locks it in for 30 days. You don't have to accept the loan. It's just getting that initial approval. Then you want to shop around. You can always cancel prior to the disbursement, even if you do sign that loan. I had a counseling call with a student last week who was being really hard on herself because she waited 2 days on a rate she liked and it went up 0.2%, which doesn't sound like a lot, but when you're talking about an $80,000 loan like she was, that was pretty significant over the life of the loan as to what that was going to cost her. So we encourage you to apply as early as possible. It takes, it could be as early as instantly to get that approval or up to 1 to 3 business days. You have that 30 days to accept the loan. When you accept it, it gets sent to your school. Your school signs off and says, yes, you are eligible for the amount. If you applied for too much and it's above the cost of attendance, the school is going to certify that for the lower amount. So you don't have to worry about getting it exactly right. Some folks are saying, oh, I want to wait for a final notice from my financial aid office. Yeah, again, just apply a little bit higher than the cost of attendance. They'll bring it down to get that right if you're borrowing the cost of attendance. Follows your school's academic calendar. So if you're on a semester program, again, that August and September disbursement. But if you're on a trimester, it might be a little bit different. If you want something different than the standard, private loans are a little bit more flexible than the federal. So if you wanted to set, an extra disbursement rate or tweak that a little bit to save on some interest of when you really need the loan, you can request that through your school's financial aid office. They might need a little extra time this year. It's the first time in about 20 years that law school financial aid offices have had to deal substantively with private loan requests. But keep in mind, applying early doesn't start your interest early. The interest doesn't start accruing until the loan actually disperses. For those details, it's going to vary individually from school to school, so make sure you're reaching out to your financial aid office. I think it is so important to shop around. I had an experience when I was applying for my mortgage where I was pressured into probably why I get anxiety about the rates move, lock it in fast, right? So I got a lot of pressure, oh, if you want to lock it in, you got to do it right now. And I was like, I have to shop around. And I can, as a financial educator in good conscience, not shop around. I was told, oh, you're not going to find a better rate. Well, I did. They did end up matching it and giving me some incentives for finding a better rate, which is similar to what Juno does. All these, I was not working for Juno at that time. But we shopping around does not impact your credit if you are doing multiple applications within 14 days of one another. That is a safe window for shopping around. Could be up to 30 or even 45 days, depending on which FICO model they're using. But 14 days is the smallest window, so we know that will not harm your credit score by doing your applications within 14 days. Usually, and the impact of a hard credit check is fairly modest, and usually about 5 points, and it gets less and less impactful as time goes on. So, and then by a year, it's typically not impactful at all. Again, I'll just pause and say, please feel free to pop questions in the chat Q&A. Y'all are a fairly quiet group tonight, but I love questions, love to make sure things are being understood. Hope this is being helpful, and that I'm not boring you too much in the 8 o'clock Eastern time hour. All right. So as you're considering your borrowing strategy, exhaust that free money first. Look for those scholarship grants and school funding before any loan dollar. I'm sure your law schools, and I know PAD also partners with accessselects.org, which I have referenced earlier in this, but they are a great nonprofit. I did used to work for them fairly recently. So I'm a big fan of their mission. They have a great scholarship data bank. They have that Max pre-law program. All of their resources are free, and they even incentivize you to use it through some scholarships. Again, borrow the minimum, not the maximum. Sometimes what you need may actually be the maximum, but do your due diligence to see if you can cut any costs so that you're cutting the amount your future self needs. Plan across all 3 years so you know what you're going to need for the entirety of your law degree. So again, you can strategize. You might be at cost of attendance for 1 year and not able to borrow more, but like you're going to have more room because of your income in the second year. And so you can't save for bar expenses your first year, but you can spread that out to your second year. So that's why you want to be thinking holistically about all 3 years. Think carefully about that federal versus private loan. Know what your private loan offers are, but really understand the protections of the federal loans that you can't get back if you forego them. If you do have to borrow private loans, or because your credit is so strong and your outcomes are fairly look pretty optimistic, again, that might be a 2L or 3L year situation that you decide that. Make sure you're comparing those rates. And then once you find good rates, lock them in, do your shopping around, finalize those, and get the best rate you can. All right. Let's talk a little bit about credit. Credit matters more in law school than some other times in your life, though I think credit is always important. But with Grad PLUS gone, a lot of students are going to have to borrow private loans, and your FICO score determines your eligibility. Typically, you have to be above 650 minimum to potentially qualify, with some other pieces thrown in there. The ability to continue your studies. If something happens to your credit score while you're in school, you may qualify for a loan your first year, but not your second or your third year. Character and fitness. A lot of folks don't know this, but as part of your bar admission, credit is typically, in most states, a piece of your character and fitness review. They're looking to make sure you can, there's not any question of you being susceptible to things like blackmail, that you can manage the money of your clients well. All of that goes into it. So just some credit habits that hurt law students: carrying balances on your credit card. That's a super high interest rate. I've even seen law students who were scared of student loans but were carrying balances on their credit card. Those student loan rates are a lot lower than 22%. Pay it in full every month when you possibly can. If you can't, keeping it under 30% is the goal. Past 30% really starts to harm your credit. They're really starting to report these buy now, pay later plans that pile up quietly and show up on your credit reports. A lot of folks don't know that. But the biggest piece is missed payments. It's the largest part of your credit score. That will more quickly tank your rate than anything else. And that's also throws up red flags for character and fitness review. While some law students may need co-signers, co-signing for others can be a bad idea, because if they miss payments, it becomes your problem. So while you're in law school, that's a very bad time to co-sign for anyone else. But to improve your chances of getting great interest rates, make sure you are having your own credit/credit card for as long as possible, but use it responsibly. Set it on auto pay to pay on time. You want to improve your credit score. Other than paying on time, the single biggest piece you can do to improve your credit score is to get those utilization rates down. And one trick to do that, because even if you're paying your statement balance, you've charged things in the meantime. If you can pay your balance down before the statement date, that's even better because that statement date, the information there is what gets sent to the credit bureaus. So paying off the credit card before it even hits the statement can really make a dent in that utilization rate. You can also make a dent going the other way, requesting a credit increase, but know yourself, know that that's not going to change your spending, and make sure that you are, not, again, that's not giving you reason to charge up that credit card. I do that about every 6 months or so because I know that it doesn't change my spending habits. And it just kind of automatically keeps that utilization rate tracking low. All right, just checking. No additional questions here. You want to limit your hard credit checks as you're leading up to your loan application. So now is a terrible time to say yes to those cashiers at the front of the stores offering you 10% discounts as you make your purchases. So really try and hold any of those until you do your loan application so that you're not getting those hard credit checks. Because though if you keep your student loan applications to that 14 days, that only counts for the same type of loan. New credit cards are not impacted by that shopping around grace period. Applying for a mortgage or a car, that still pings your credit separately. So you want to avoid those before you secure your loan if you can. If you don't have a long enough runway, lots of students entering law school did not have a lot of notice on all of these federal changes. So if you did not have the ramp up to get your credit to a point where you can get approved for quality loans at good interest rates, you may want to talk to a cosigner about signing on for that loan so that you can be eligible. There are things like cosigner release that are offered through various lenders that you want to check. If that cosigner is concerned about you paying on time, you could refinance your loan at the end once you have an income. And typically refinance is good to keep on the radar anyway, because those rates tend to be lower than student loan rates because you have, you're a safer bet, just to use that betting term again. You essentially are able to show income, and typically those rates can be a couple of percentages lower than the student rates on average. All right, we've got a question. Will we send this information to our email afterwards? Yes. So if not tomorrow, no later than Monday, I will send the recording and this information along with some resources to everyone who registered. I'll send a group to those who attended and then also follow up to those who did not attend as well. Feel free to share it with friends, classmates, other folks. We'll say that we've got some great resources here. If you don't know about Juno, essentially, we are a group negotiation organization that uses large swaths of students who become members for free. There's never a cost to join Juno. We negotiate with lenders to get group rates, bulk rates on private loan rates. So what we've done is been able to lower costs for everyone who signs up to Juno with the widest eligibility in the market. We've negotiated a clerkship deferment with no origination fees, and we have a rate match guarantee. So for the small percentage of students that don't find their best rate on Juno, we'll match it and give them 1% cash back of their loan. So a really easy process, soft credit check to check what you qualify for, no commitment, 100% free. We get paid if we find you the lowest rate and you decide to take a loan through us. The lenders basically pay a finder's fee. So that's how we're able to offer these services. See another Q&A popping up. Do you meet with students like a consultation? Absolutely. I also have that link coming as well. We do one-on-one consultations. Does financial aid help with the cost? Would love to hear more specifics with that question. So schools offer a wide range depending on your qualifications and merit. or need-based aid, but essentially most students, even if they get a full tuition scholarship, have to borrow loans for living expenses unless they have, some savings or family resources to help with that. But with the interest rates, typically not unless there's a loan repayment assistance program at the school you're attending. They vary widely from school to school. Some have private loan coverage, some only cover federal loans. Some are hoping to cover private loans in the future, but because of these recent changes, haven't fleshed that out. All right, I'm just seeing that I missed a couple of these questions in the chat. Yeah. So how does not having an income impact loan applications, especially if you cannot work during 1L? This is actually one of the reasons why I ended up at Juneau, because I was frustrated with lenders requiring that. That is one of the pieces that Juneau has successfully negotiated, is no income requirement for qualifying. I actually had a one-on-one with a student this afternoon where we completely tested this, and we put in, her current income versus her future income of 0, and the rates were exactly the same for the lenders that did not use the income through the threshold. So she still qualified for the same lowest rate, whether she put in $0 of income or about 100K in income. So that is one really great piece that Juneau has been able to negotiate. We anticipate, I already mentioned this, but those with this is again illustrative. There's other things that go into underwriting, like length of credit history, but 710 FICO, typically you're going to find that your interest rate is below the federal direct unsubsidized loan this year. If it's less than 710, you might find it in the middle of unsubsidized versus the Grad Plus loan, which I just referenced. Current students do have access to that if they've already started their program, but students that have not started will not have that. All right. So again, I mentioned this. If you have a interest rate, if you do find a lower interest rate, which only about 5% of students of our members did last year, they will match it and give you cash back. I'm also pulling, I know somebody asked for the link to meet with us, meet with me. So I'm pulling that as well so that you have the link. I do not only work with I can help with dual degrees as well. So we can kind of strategize that, because that's even more complicated, because there are 2 different limits for loan for the 2 different degrees. All right. So to schedule a call, and again, I will have that a little bit later, but for those who are looking to borrow and want to check their rates, again, for free, doesn't pull your, isn't a hard credit score, takes about 2 minutes. It's a great starting place. You can find out what you qualify for with our group negotiated rates through this link that I have dropped in the chat, also on the QR code if you have your phone handy. And I would be happy to chat with you further. As we keep going with some additional resources, I'm also popping over. Okay, I see that was over on the Q&A, as well as again, juggling multiple Q&As. Really appreciate the questions and the interactions. It's always nice to know that I'm not talking to myself. Love that. So 5 most expensive mistakes before we get to those links. Living at full cost of attendance when you can otherwise limit that. Ignoring loans till 3L. If you can put some things towards your balance and your interest gets added to your balance around the time that you enter repayment. So if you can make any dents in that interest, that avoids the compounding interest that happens at that point, about 6 to 9 months after graduation, depending on your grace period. A lot of folks that do get Big Law internships, they see that paycheck suddenly coming back into their lives, or even into their lives for the first time. and they want to go on a spending spree after living very modest student budgets. But keep in mind, it is not a raise. It's not to be shown frivolously. You want to save for those bar expenses first, maybe pay down some loans, borrow less the next year. No emergency cushion. I mentioned not bringing your loan balance, your savings balance down to zero if you can help it. If you're in a place that you have savings, you know, one bad car repair, medical bill, you're going to have to put that on a credit card at crazy interest rates. And make sure you're reading those fine prints, reading the rules, etc. I'm going to put the general link for any degree program, but if you click law, you'll see I'm the first one there if you want to schedule that meeting. I know I'm almost done, I promise. I understand if folks have to hop off at 9. And, you know, again, just key takeaways: COA is ceiling, not target. Build your credit now, keeping that utilization rate under 30, FICO 720 plus. Plan early for summer and bar season. They're part of the total cost. Use that 3-year takeaway. Borrow the minimum. Compare every offer. It can save you thousands, and lock rates early. You can always cancel it if you find a lower rate later. Again, we offer free access to these negotiated deals, free access to one-on-one counseling, free access to the tools that I have talked about tonight. So my recommended next steps for you are to build your 3-year budget, check your rates, know what you're starting with, explore our resource hub. I'll pop that link in the chat as well. We've got some loan guides, we've got some credit guides, and we'll go from there. I've got a question in the chat. I do get it. Like, yeah, life comes at you, and there are reasons why it is hard to save, including being a single mom. Kudos in trying to do all of those things and juggling that while life is absolutely lifing. I have successfully, I can't promise that I can increase your credit score through a meeting with me. I have helped several students who were very close to the credit requirements, and we talked through what was impacting their credit score. They were able, in a place that they could make some changes, and it did work, and it brought them above the credit score, and they did go from not being able to qualify within a month when the next cycle updated. So I'm happy to talk you through what I know, and hopefully that is helpful to give you some impactful knowledge to improve that credit score and potentially get you in a better place. But there is unfortunately a lot to the underwriting process that every lender looks at just a little bit differently, but we do know based on the credit bureaus what impacts score, and so we can talk you through those pieces. If you have questions, this is my email, leah@joinjuno.com. We have that rate match. If you do find a lower rate, you just reach out to them at hello@joinjuno.com. I have the QR code for that meet there, but I've already posted it in the chats. If you know folks who are struggling to navigate this, please feel free to connect them to me, to Juno. We would love to help you all along the way. I'm loving the energy in the chat. I know you guys can't see my host and questions, but I'm thrilled that you were able to make dinner and listen in and have the coffee. I live on too much coffee and not enough sleep. Completely understand. So I look forward to chatting with you in the future. Set those appointments. I hope this was helpful. Any additional questions? I'm happy to stay on for a few more minutes. You've all stuck with me. I apologize. This is my first time doing this particular presentation, and I think I underestimated how much information is in here. So hit me with any additional questions you have. So many questions. Yes, let's do those on a one-on-one or via email. Perfect. All right. Otherwise, if you have more general questions, feel free to throw them at me. But if you're working on questions, use the raise hand feature. Otherwise, feel free to sign off and have a great, fantastic evening. All right. Thanks so much. I'll look forward to your email.